Hey, let's complete this suite of videos. Of but now we're just coming on to look at the sole trader, right? So the sole trader is, or if you let me say the sole trader is self-employed individual, if you like. So they're not working. There's no employer business going on over here. What happens with them? You might remember from past experience, there's a class 2 scenario and there's a class 4 scenario. I mentioned just before when I started right at the beginning, trying to talk out of context, £2.85 per week. If you exceed the threshold of 6025. It's just a flat £2.85 that you pay. Typically in exam times, you get £2.85 times 52 weeks, times 52 weeks, depending on how many weeks you've been trading for. And that really, if the profits for the tax year exceed that small profit threshold, and you pay this by the 31st of January following the end of the tax year. So this sort of lines up with normal self-assessment, if you like. Then we have what's referred to as the class 4, and the class 4 is, and then what you have is that you have what's referred to as your class 4 profits, and these class 4 profits are then kind of assessed, if you like. Well, again, just quickly, this we have age 16. These, I think I never know how to remember. I just always have to cram these. This is about the week. This starts from the week that you're age 16. This is the tax year after your 16th birthday. So you just have to kind of know that. And this is all the way up till the week that you reach your retirement age, and this is the start of the tax year after reaching your state retirement age. I mean, remember that. That's pretty much it. They're just kind of dates. But here, of course, this is what's critical. Of course, when do you start deciding whether or not this person will pay class 4? We look again. It's similar, literally similar to the employee, if you like. Almost trying to line things up. The same sort of 0, 9, 2%, and the same kind of boundaries, if you like. You can see exactly what's going on. Right. So, and this is paid under self-assessment. We'll see this in chapter 12. So let's just look at a, I guess straight away we should look at a question. And if we see a question, we see a scenario here which says Tim is self-employed. He has taxable income of 47,600. Calculate his class 2. Well, 47,600 definitely exceeds the small threshold limit of 6025. So he will pay £2.85 times the 52 weeks. Yes, he's going to pay this, and that's going to take him all the way to 148, right? And that's a very standard figure. Then they want for the tax year 1718. I mean, this is for the year ending 30th of September 2017. So this, of course, will be charged in the tax year 1718. Yes, and so that's how we assess this. If you like, that's the trading. You can see here it says that he has taxable trading income of 47,600, if you like, for that year. So that's what we're looking at. So this was kind of put there to almost kind of trip you and think, oh, do I start cutting it up? No, it's trading. It's whatever his trading period has been that we work with, right? So folk, don't let that trip you. So we just band it again. It's of course it's in bands, of course, right? So here's the band, just quickly showing you again very quickly. Anything above that is 0, between that 9% and then 2%. So let's just do that very quickly. So what we can see is that we have, of course, 45,000 minus the 8164, whatever you get here, this minus this, multiply that by 9%. And then you have the 47,600 minus the 45,000, multiply that by 2%. And that should take you to your figures. And this comes out at 3015, and this comes out at 52. So add those two together, 6, 7. Yes, and that's it really with national insurance. So it's just making sure you're kind of happy with this and you're playing with it. I think I've noticed there's a little question comes out in the exams. In your textbook, I need to find out. I'll talk about it in class. And just a little one, a little, what's the word? Little one they like throwing in. And it's to do with your AMPs, with your, and typically this is not a benefit. You know, as long as it's within. It only becomes a benefit if it's greater than what your threshold is allowed. So if for example, you did whatever 15,000 miles and you got paid whatever 65p per mile, well, yes, if this 65p, first of all, we don't do the 45p and 25p. We just treat it all as 45p per mile. So you would you would multiply 45p times 15,000, and if you've been paid basically the extra 20p, as you can see, over the 15,000 would be considered a cash benefit. It's an odd one. It's only because I've seen it in a question before. It's not been in these notes, which is why I typically like to go for the textbook. But it's in there. It's the sort of thing you come across. So the key point is that where you have mileage and you have received quite a bit of funding, mileage, and it's greater than the 45p across the entire miles, if you like. So don't break up the 25p as you would for income tax, just for knowing whether or not you've got a cash benefit. If you have it over that 45p for whatever the number of miles, then the extra is considered a cash benefit. So you simply think of it as cash. When I say cash, just cash, not like class 1A or anything, just cash, right? And add that on top. But hopefully we'll see exam questions on that when we get there. Cool, great stuff. End of chapter 11.